There's a little bit of tension in the stock market. I can feel it, and it's showing up in some of the data as well. So let's look at what's going on. Let's start here with the bullish perspective. This is our running tally of average strategist estimates for the S&P 500 at the end of the year. That's what we're looking at in the white line here. The blue line, S&P 500. This is typically a relationship which is pretty bullish, where you have the average Wall Street strategist saying the stocks are going to go up. But here's a period that we went through, basically from the start of the year up until, you guessed it, about now, where the expectations for the market were actually below where the S&P 500 was. This is basically this little blip right here. Now we're back above that, meaning that strategists are actually kind of upping their estimates right now, saying that by the end of the year, stocks are going to keep moving higher. You have to wonder whether or not this is based on the fundamentals or if it's based on sort of a catch-up game, which strategists have sort of played in the past. So here's another interesting part. This is a little bit more on the bearish side. I think this is important because we're looking at a bit of a breakdown in some important stocks that companies, rather investors, are going to be looking at, because these are industrial companies. The blue line here is the S&P 500 industrial sector. The white line is looking at the Dow Transport Index. People have been talking about this, and for good reason, because they're both starting to break down. If you look in the past couple of weeks, they're down about 8%, getting closer to about 10%. This is something that's very important that we're going to need to watch, because that's a sign that perhaps some of the industrial type American first names have actually been weakening a little bit. And then finally, there's going to be a battle here with history, perhaps. We talked about this earlier in the day, and this is going to be important as we start the month of August, because history shows us August is a pretty volatile month for the stock market. I want to look at the SEAG function on Bloomberg in this column right here, which is looking at the month of August. These boxes are showing you the percent change in the VIX throughout the month. An average 12% jump in the VIX in the month of August beats every other month here, guys. The takeaway from this is that things might be a little bit dubious in terms of the outlook, given how bullish some of the strategists have been, but yet some of these indicators starting to roll over a little bit. We've also got small caps down, but we're going to talk about that on What'd You Miss.
Oh, nice tease ahead. But you know, the issue here with the forecast by the strategists is that a lot of them also expected more volatility, which we haven't gotten this year.
This is true. That is one of the calls that I think people have been expecting, to some kind of correction. Maybe it doesn't have to be a big one. Maybe it's 5%, maybe it's 7% here, to get volatility sort of back towards that historical norm.